bring on board Jitendra Arora, who's the Senior EVP and Fund Manager at ICICI Prudential Life Insurance Company, to talk to us about the markets. Where is he seeing fundamentally everything moving? Jitendra, thank you so much for joining in with us this afternoon on ET Now. And, I just want to talk about the broad markets first. When you look at it, whether it's the Nifty, last week we saw that 19,300 around those levels coming in. Today, trying to come back to those 19,600 levels, around those levels there. What is your view on the long-term basis for the market? Where do you see it, or do you expect it to be a bit range-bound right now?
Good afternoon. So you asked actually two questions in the same flow. One is about would you expect market to stay range bound, and what is my long-term view? And I think that's where there's a little bit of, if I may so-call, divergence here, in the sense that we are very positive on Indian markets over a long time, but we still expect that in short time, which may be like next 3 to 6 months, we can see markets consolidating around current levels. That period may get stretched if we see more election-led uncertainty coming into the markets, which I think will start becoming a factor at some stage psychologically as we move closer to the election cycle.
Okay, fair enough. Jitendra, hi, morning. Wanted to also understand your outlook then on the FIIs, which have begun selling quite relentlessly for our own markets. Is that emerging as a huge concern? But, at the same time, one needs to take into cognizance the fact that we're not alone in this downfall. We are seeing a calibrated fall across the globe. But what's your view on the liquidity situation?
So on the FII liquidity per se, honestly, I would not call it a relentless selling per se, what we've seen. If I see the FII inflows so far, for the fiscal year, we've seen a cumulative buying of in excess of $17 billion. And last month, it was more than $4 billion of buying by FIIs in the Indian markets. On that, if they happen to sell around $500 million to $1 billion over a period of a week to 15 days, I'll accept it. Because we do see that fundamentally India remains a very, very attractive market, and we'll see these bouts of selling and buying happening by FIIs. But if I were to stick my neck out and say that how do we see direction of capital over a longer period of time, I think we will see steady FII inflows.
Right. Jitendra, I also want to understand one thing is in terms of the IT space. We have spoken about, we were expecting that recovery coming in earlier this year. That hasn't happened. What is IT now looking like to you? How do you view IT in terms of, obviously, we have the numbers that have come out for the June quarter, but going forward, what is your stance on Nifty IT? Anything that is looking attractive to you over there?
So on IT, if you see our portfolio stance, it remains slightly underweight because, again, we believe that stocks have run ahead of the earnings turning around. And I think a lot of that has to do with the fact that the flows by both FIIs and DIIs into the markets have been fairly strong. And IT still remains one of the consensus underweight sectors for domestic industry. So I guess it's simply the technical which is taken over the short term. However, we don't see that IT earnings, we don't think that IT earnings have bottomed out. Or perhaps this quarter will be the inflection quarter, the quarter gone by. I think we can see the pain continue even during the September quarter per se in terms of earnings. And from there, obviously, a lot will depend on how US economy turns around post that. There are a lot of economists on the street who are still calling out for a US recession in Q4 or perhaps Q1 of calendar 24. So if that plays out, we think that the earnings can take some more time to recover. And in that case, the market, the stock prices are still higher than where they used to trade historically in terms of valuations. So that's why we are taking a call that we need to see some amount of time correction or price correction in the stocks for them to become outrightly attractive.
Okay, fair enough. So given that you're talking about the earnings season overall recovery, one sector that has definitely stood out like a sore thumb would be the consumption space. That volume growth slowdown is definitely evident in the kind of numbers that a lot of the FMCG companies have reported. With the high inflation, do you believe that this is going to be a bit of a stumbling block in the coming quarters? What's the outlook for the sector as a whole?
So on the sector as a whole, we still believe it's more of a defensive sector in your portfolio. So, and regarding the volume, again, this is not one of the sectors where I'm looking for volume growths of, let's say, very high single digits also on a whole. What you are looking for, mid single digits volumes, mid single digit pricing, and perhaps overall top line growth of somewhere around 10 to 15%, and earnings moving along the same pace. However, the stocks seem to have disappointed, and in fact, it has happened not because of the inflation. It has happened as the inflation is going away. Because what's happening is that as inflation is going away, we are seeing that the unorganized players are coming back to the market to give a competition to some of these players, which was not happening in last 2 or 3 quarters. Levers highlighted the same in their call, and today Britannia also highlighted the same in their call. So I guess we may see that period of adjustment happening for the organized sector for some time. But once that plays out, we believe that these are very good enterprises who generate very high ROEs and still have a steady earnings growth trajectory. I'll for the long term, I still remain an investor into some of these stocks. However, one can choose tactically to remain underweight in the sector, given that we are seeing some kind of slowdown here, and also the rural recovery is not likely to happen so quickly as we think.
Jitendra, we've spoken to a lot of NBFCs, especially the ones that focus more on the MSME side or the microfinancing side. They keep saying about, that good demand. They are seeing good trends coming in there. Anything attractive that you're finding in these names, 5-star or Ugro Capital, anything on that front that you find attractive, or overall for that sector that you're seeing something interesting?
So I guess what's happening in microfinance sector is essentially we are seeing that the credit cycle is very, very benign. And given the fact that some of these companies did not have huge disbursements in FY21 and 22, the disbursement pace started picking up in FY23 and continues to be very strong in 24. So they are cyclically in a very, very good spot. And the valuations for the sector also remain attractive. So I guess one can find names where they have conviction, and these names can deliver for them for some time to come. So I find the sector attractive as a whole. However, I'll not be able to discuss on the individual names here.
Fair enough. And Jitendra, before we let you go, just walk us through, your outlook on the entire manufacturing space, because a lot of experts are alluding to this manufacturing renaissance of sorts that's playing out across India, and how a lot of themes are likely to be big beneficiaries within this space. Would you also be jumping on the bandwagon?
So in some ways, we have been on that bandwagon for some time. So if you see some of the key EMS players, they've been part of our portfolio for quite some time. And I believe that in manufacturing, obviously, India still has a lot to catch up with a lot of economies. And we can see that government is providing a lot of thrust on that side, with the most recent being the PLI on the IT manufacturing. However, these things take time, as we all know, because first is to move the manufacturing of the end product, which will start with assembly. Then you will start getting the components to be manufactured into India. So that whole ecosystem, the creation of that ecosystem is a very long drawn process. But we believe we made a very good start in that respect. And the focus of the government there is completely unwavering. So to that extent, I will agree with a lot of people who are saying that perhaps manufacturing is one theme which is here to stay in India for some time.
Okay, Jitendra, thank you so much for joining in with us this afternoon on ET Now, giving us an understanding in terms of the markets, your views on different sectors as well. Thank you so much for joining in with us.